Hello and welcome to The Big Story, where we'll discuss the top news of today and explain why it matters. I'm Kimberly Jiao, coming to you live from the Straits Times newsroom. First up, the Singapore economy beat expectations and grew 0.5% in the third quarter compared to the same period last year.
Avoiding a technical recession, authorities now project that the overall growth for 2019 will be a narrower 0.5 to 1%. That's up from the previous forecast range of 0 to 1% growth. But the picture isn't all rosy. Exports remained weak in the third quarter, and the forecast for 2019 has again been cut to between -10% and -9.5%.
To help us make sense of these figures today, we have business correspondent Seow Bei Yi. Hello, welcome to the show.
Hi.
So while the GDP figures are positive, they are still low, and some may say that it feels like a recession. So why is that?
Right, so there might be a few factors contributing to this sentiment. For one thing, we're actually looking at slower growth the coming year, and that's between 0.5% and 2.5% for 2020. And even when we look at the figures, the upper limit is actually lower than the full year growth that we had for 2018. And I mean, when you think about it, it might mean that even if things don't worsen, you might still see dampened business sentiment, companies being a bit more cautious with the way they are spending and the way they are hiring. And coupled with that are uncertainties on the horizon, such as the US-China trade tensions. We are still a bit unsure as to whether a phase one deal is going to be sorted out, when it will be sorted out, when it will be signed, and whether this will lead to a more comprehensive sort of agreement in the longer term. So all these factors, like including the Hong Kong Human Rights Act that has recently come up, will add complications to the overall sentiment and the situation.
I see. So what are the bright spots of the economy?
Right, so for the third quarter, actually the bright spots that we see this time are quite similar to what was mentioned in the previous quarters. So services producing industries, I think, have provided some support in finance and insurance, for example. We look at the demand in digital solutions and payment services, like propping it up. And also, I think areas such as information and communications have also been doing quite well. Construction has also been another bright spot, and it's expected to actually sustain growth into the coming year.
Oh, nice. All right, so the Trade and Industry Ministry, right, projected this sort of a slightly higher growth for next year. So actually, why is that?
Right, so I think one important factor here is the manufacturing sector, which has actually been quite affected by the fallout from the trade war. So we are looking at a recovery in the manufacturing sector, especially for electronics, which has seen a cyclical downturn. So now things are actually starting to go back up again. It is expected, the manufacturing sector is expected to emerge from recession in 2020. So, we see the shock from tariff hikes actually sort of subsiding, and, firms restarting their capital expenditure plans. And also, I guess, things will start to look better overall from there. Apart from that, I mean, there are also other factors that support GDP growth. We see manufacturing supply chains actually shifting towards ASEAN as companies try to diversify from China. And I think that will also kind of contribute to the growth in this area, including in Singapore.
I see. Well, thanks for coming on to share more with us, Bei Yi. And if you'd like to get stuck into all the details and all the numbers, you can have a look at the full article, which is available on straitstimes.com.